You ever get that feeling? You work hard, maybe even see a little bump in your nominal pay,
Right.
but somehow your actual take-home feels like it's shrinking.
Yeah, definitely.
You're not alone, that's for sure.
Yeah.
It begs the question, without some massive career change overnight, is there like a real way to hold on to more of what you earn?
That's precisely the puzzle we're diving into today. We're taking a close look at the core ideas from a YouTube summary of Akira Tachibana's newly updated book, New Poor Are Rich, Reversing the Inequality of Society with a Not Employed Way of Life.
Oh, okay.
This revised edition just came out this past March 2025.
Okay, so our mission for this deep dive, especially for you, the learner, is to really understand the main arguments in this book. We're
Right.
focusing on the world of personal finance in Japan and this fascinating idea the author puts forward, setting up a micro corporation.
Right?
We'll be digging into Tachibana's take on the significant tax and Social Security burdens that Japanese salarymen are facing.
And our main source for this is a detailed summary of this personal finance book that we found on YouTube. The central point it raises is that this high national burden rate in Japan disproportionately affects those working traditional salaried jobs.
Oh.
The book suggests that forming a small corporation could be a strategic move to potentially, lighten that financial load.
Let's get right into this national burden rate. The book summary throws out a pretty hefty figure, 46.2% in Japan. What does that actually mean for someone working a regular job there?
Essentially, that national burden rate, as the summary explains it, is the total percentage of your earnings that automatically goes towards government coffers through taxes and Social Security contributions.
Wow.
So for every yen a Japanese salaryman earns, nearly half of it is directed to the government.
Almost half. That really puts things in perspective. And the summary even draws a pretty striking comparison to the past, right? Something of farmers way back when.
It does. The summary draws an analogy to farmers during Japan's Edo period who had to hand over roughly half of their harvest as tax.
All right, the Nengu.
Exactly. It then uses this to frame the situation of today's Japanese salarymen as similarly burdened, even using the term quasi-peasant. Are you spent?
It's a strong image, yeah. It's meant to convey the author's perspective on the current financial pressures.
And it's not just the size of that burden, is it? The summary also highlights that wages in Japan haven't really kept pace with the cost of everything else, especially recently.
That's a crucial point. Despite ongoing inflation in Japan, particularly in recent times, the summary points out that salary increases for many Japanese workers have been quite minimal.
Yeah.
While there might be some sectors seeing a bit of wage growth now due to those inflationary pressures, it's not widespread. More importantly, these small increases often don't keep up with how much prices are actually rising.
So real wages are dropping.
This means that people's real wages, what their money can actually buy, are effectively going down.
Yeah.
So you've got this tough situation where a bigger slice of your earnings, which aren't really growing much, is being taken out for taxes and Social Security. That doesn't leave much for everyday life.
Precisely. This combination of increasing tax and Social Security burdens alongside falling real wages is rapidly shrinking the amount of money salarymen have available to spend. The summary suggests this is leading to a situation where many individuals in Japan are facing financial hardship and struggling to make ends meet.
Now, according to the summary, the book says there are basically two ways to tackle this. Either earn significantly more money or somehow reduce the amount of that burden. Let's think about that first option, boosting your income.
The summary outlines that the most direct way to alleviate this financial pressure is to increase your earnings. In theory, this can happen in two ways, either by getting a larger gross salary or by finding a way to reduce that national burden rate.
And the book seems pretty realistic about how likely it is for most people to just suddenly double their paycheck, doesn't it?
Absolutely. While the idea of simply earning a higher gross salary sounds appealing, the summary acknowledges the very real challenges that most people face in making that happen.
Right.
It points out that significant salary increases often require putting in substantially more hours, and factors like your education and the type of job you have can limit your earning potential regardless of how hard you work.
So it's not that simple.
The summary concludes that for the majority of people, drastically increasing their gross salary isn't a practical way to improve their financial situation in the short term.
Okay, so if a big salary jump is a long shot for many, let's look at that second possibility, reducing the burden rate. This is where this idea of a micro corporation comes in, what the summary calls this back door.
That's right. The second approach the book suggests for boosting your net income is by forming a microcorporation, or the summary rather dramatically refers to this as a backdoor.
A backdoor, okay.
And even compares it to drawing a joker in a card game, implying it's a somewhat unexpected but powerful tactic.
Huh. A joker. And the potential financial impact they illustrate with an example is quite striking. Can you walk us through that?
Yeah, the summary provides a compelling example. If someone has an annual income of 3 million yen, right?
Uh-huh.
And if they could reduce their overall burden rate from, say, 50% down to 20% by using a microcorporation,
Okay.
their resulting take-home pay would be significantly higher, 2.4 million yen instead of 1.5 million yen.
Wait, that's
That's an extra 900,000 yen in their pocket annually.
just like that.
Yeah.
Without putting in more hours or taking on a tougher workload.
Exactly. The summary emphasizes that this considerable increase in net income doesn't require you to work anymore or earn a higher gross salary. It hinges on the mechanics of setting up and understanding how a microcorporation can potentially lower your effective burden rate.
And this isn't a completely new concept from this author, is it? The summary mentions that this book is a revised edition of a previous one.
That's correct. The book, New, Poor Are Rich, is indeed a revised edition indicated by the Shin character of Akira Tachibana's earlier bestseller, Poor Are Rich.
Right, I think I heard of that one.
Yeah, the original book was quite influential, established Tachibana as a notable voice in this area. However, it was published back in 2011, which is, quite a while ago.
True. Laws change.
Exactly. Given that tax laws and company regulations can change over time, the specific details and figures in the older book would have become outdated. This new version, updated as recently as March 2025, takes those changes into account and reflects the current legal and regulatory landscape in Japan.
Okay, that makes sense. So what's the fundamental difference that makes channeling income through a corporation potentially more advantageous than receiving it as an individual? The summary touches on how the tax systems work.
Right. The book argues that there's a core difference in how individual and corporations are taxed in Japan. Individual income tax, as the summary explains, is a fairly complex system. It uses what's called comprehensive taxation alongside various special rules, withholding taxes, and different types of deductions. The author suggests this complexity isn't accidental, making it harder for individuals to easily find ways to save on taxes.
Like they make it complicated on purpose.
That seems to be the implication, yeah. Things like interest income, capital gains, and the way salary is taxed at the source are examples of this multi-layered system.
It sounds like you need to be a tax expert just to figure out if you're paying the right amount. How does that compare to how corporations are taxed?
In sharp contrast, corporate tax is presented as being much more straightforward. It's primarily levied on profit, which is clearly defined as the revenue a company brings in minus all the legitimate business expenses it incurred.
Revenue minus expenses equals profit. Simple enough.
Pretty much. This profit is then taxed at a generally flatter rate. Whether the income comes from sales or investments, it's all added together, and then all eligible business-related costs are subtracted before the tax is calculated.
And the actual tax rates themselves are also quite different, according to the summary.
Yes. The summary highlights that the effective corporate tax rates are generally lower than the highest individual income tax rates.
How much lower?
Well, while the top individual income tax rate is mentioned as 45%, the effective corporate tax rate, even when you factor in local taxes, tends to be around 30%.
Okay, that's a big difference.
And furthermore, for these smaller microcorporations with a taxable income under 8 million yen, the effective corporate tax rate can be as low as 18.5%.
Wow, 18.5%.
Yeah. This significant difference means that receiving income through a corporation can be more tax efficient than receiving it directly as personal income, especially when you also consider the wider range of expenses a corporation can deduct.
Okay, so taxes are one big piece of that national burden. The other significant part is social insurance, things like pensions and health insurance. The summary suggests that for many salarymen, this is actually becoming an even heavier financial weight.
That's a critical point. The summary emphasizes that for many Japanese salarymen, the premiums they pay for social insurance, covering both pensions and health insurance, have now become a larger financial burden than their income tax.
Bigger than taxes, really?
Apparently so, for many, yeah.
Let's break down the pension system first. There are different types, right?
Yes. The summary mentions two main types: the national pension, which primarily covers those who are self-employed, and the employee's pension, which is for people working in salaried positions.
Got it.
The summary points out that the national pension system is currently facing a substantial financial shortfall,
And it sounds like the burden of dealing with that shortfall is falling on the shoulders of the salaryman, according to the book summary.
Exactly. The summary states that the employee's pension system essentially helps to support the national pension through a shared basic pension fund.
Ah, okay. So one subsidizes the other.
Right. And a similar situation exists with health insurance, where the employee's health insurance system helps to support the national health insurance, which is also facing financial strain due to rising costs associated with providing care for the elderly.
So the salaryman systems are propping up the others.
That's the argument presented. The consequence of these deficits is that social insurance rates for salarymen are steadily increasing to try and cover these gaps.
The summary gives us some specific numbers on just how much those rates have gone up.
It does. The employee's pension rate, according to the summary, has increased from 15% in 2009 to 18% in 2025.
3 percentage points.
Yeah. And similarly, the health insurance rate in Tokyo has reportedly risen from 9% to 11% over the past 15 years.
Okay.
To really illustrate what this means in real terms, the summary provides a model scenario.
Walk us through that. What's the situation for a typical salaryman in their example?
The example they give is a salaryman earning 6 million yen annually. Back in 2010, they would have paid roughly 25% of their income, about 1.5 million yen in total, towards social insurance. Okay.
Now, the employee share is half of that, right? So around 750,000 yen out of their pocket.
Right, 700 to 50K.
Now, if we look at 2025, for that same 6 million yen salary, the social insurance rate has increased to approximately 30%, totaling 1.8 million yen.
Wow.
The employee's portion of that, what they directly pay, is now half, around 900,000 yen.
So it went from 750,000 to 900,000.
That's a significant annual increase of 150,000 yen in what this salaryman is personally paying towards social insurance, just from the increases.
Yeah, that's a considerable chunk of change, and the summary directly links this to that feeling of your take-home pay not keeping up, even if you get a raise.
Precisely. The summary attributes the stagnation or even the decrease in net income, despite seeing small increases in your stated salary, directly to these rising social insurance costs.
They call it a stealth tax.
Yeah, even call it a stealth tax. It points out that even if someone receives a modest pay increase, a significant portion of that increase is often swallowed up by higher social insurance premiums, leaving little to no actual improvement in their disposable income. So the raise disappears before you even see it.
Pretty much.
And it doesn't sound like salarymen are necessarily seeing a direct, immediate benefit from these increased contributions, according to the summary.
That's a crucial point to understand. The summary emphasizes that the increased social insurance contributions being paid by salarymen aren't necessarily translating into greater benefits for them down the line.
So where's the money going?
Instead, these extra funds are primarily being used to cover the existing financial shortfalls within the national pension and national health insurance systems. That's the claim.
So while salarymen are carrying a heavier load, the summary suggests that there are others in the system who are actually in a more favorable position.
Yes, the summary argues that while salarymen are bearing this increasing burden, those who are self-employed and contribute to the national pension and national health insurance are actually in a more advantageous situation.
How so? What's the difference in the financial pressure they're facing?
Well, the summary compares the relatively small increase in national pension premiums from about 14,000 yen per month in 2009 to around 17,000 yen per month in 2025.
Okay, that's
A difference of only about 2,300 yen per month. Compare that to the much larger increase salarymen are experiencing through their system.
Right, much smaller increase.
Additionally, the self-employed benefit from how their national health insurance premiums are calculated. Unlike salarymen, whose premiums are based on their total gross salary, the self-employed pay premiums based on their income after they've deducted their legitimate business expenses.
Okay. So they can lower their taxable income, which lowers their premiums.
Exactly. This gives them the potential to lower their premiums by increasing their reported expenses.
And the level of health care you receive is the same regardless of how much you pay into the system, right?
That's correct. The summary points out that the healthcare benefits provided under the national health insurance are the same for everyone covered, regardless of the amount they contribute in premiums.
So paying less is definitely better if you get the same thing.
Makes sense, right? This makes paying a lower contribution particularly advantageous.
So the summary then asks the question, why not just become self-employed and file a blue tax return? That sounds like a better deal than being a salaryman.
Well, while becoming a self-employed individual and filing a blue tax return is presented as potentially better than being a traditional salaryman, the summary argues that forming a microcorporation offers even greater benefits.
Even better than self-employed. Why?
The primary reason given is the more favorable corporate tax system compared to the individual income tax system that the self-employed are still subject to, even with the advantages of blue tax filing.
So it comes back to that corporate versus individual tax difference again.
Exactly. And it sounds like the microcorporation structure gives you even more control, particularly when it comes to your own salary, or husha, as the summary calls it.
Officer compensation, right?
Right. By establishing a microcorporation, the owner has control over their hunyo. The summary suggests that this can be strategically set at a level that potentially minimizes their personal income tax and even their personal health insurance premiums.
How does that work for health insurance?
Particularly in situations where the microcorporation only has the owner and possibly family members as employees, which might mean they aren't required to fully participate in the standard social insurance system in the same way a larger company would. There are nuances there, of course.
Okay, interesting. Let's dive into those expense deductions. The summary makes it sound like there's a huge difference between what someone in a regular job can deduct and what a corporation can.
It's a very significant difference, yeah. The summary explains that individual salarymen have very limited options for deducting their expenses.
Like almost nothing, usually.
Pretty much. They rely primarily on a relatively small basic deduction and a rather restrictive specified expenditure deduction.
Yeah, I've heard of that one.
Right. It requires very specific and quite high levels of work-related spending to even qualify. Most people don't.
But for a corporation, it sounds like it's a whole different ballgame.
Absolutely. Corporations have access to a much broader range of legitimate business expenses that they can deduct from their revenue.
Like what kind of things?
Well, the summary highlights that if a corporation has a revenue of, say, 6 million yen and can legitimately claim 6 million yen in business-related expenses, their taxable profit becomes zero.
And zero profit means?
Zero corporate tax.
Yeah. And one of the key advantages seems to be how a microcorporation can handle salaries paid to family members who might be involved in the business.
That's a major potential benefit highlighted in the summary. Unlike individual businesses where salaries paid to immediate family members who live together are generally not tax deductible.
Right. You can't deduct paying your spouse if you're just self-employed usually.
A microcorporation can deduct these payments as officer compensation. The summary gives the example of setting a spouse's salary below the tax-free threshold, such as maybe 960,000 yen annually.
Okay.
This allows the spouse to receive that income tax-free, while the corporation can deduct the full amount as a business expense, effectively reducing the corporation's taxable profit.
That's a pretty significant advantage. A double win, almost. What about those daily allowances for business trips? The summary seemed quite enthusiastic about that.
Yes. Daily allowances for business trips are another notable benefit mentioned. While individuals can typically only deduct their actual documented travel costs.
Like receipts for trains and hotels.
Exactly. Corporations, however, have the ability to establish internal travel expense rules and pay daily allowances to their officers when they go on business trips.
Allowances for what, exactly?
These allowances are intended to cover not just their transportation and accommodation costs, but also general living expenses they incur while they're away on business meals, incidentals, that kind of thing. The summary even suggests that family trips could potentially become partially deductible by setting daily allowances for both the owner and their spouse if they are both officers of the microcorp and the trip has a legitimate business purpose.
Partially deductible family trips. How does that work?
Well, the idea is if both are officers and genuinely conducting business, they can both receive the allowance. The summary mentions that the fact that a similar daily allowance system exists for national government employees lends a degree of legitimacy to this practice with tax authorities.
Okay, if the government does it.
That seems to be the logic presented, yeah.
So it sounds like going the microcorporation route can potentially lead to this double or even triple benefit in terms of tax savings.
Exactly. The summary concludes that forming a microcorporation can indeed lead to minimizing corporate tax through maximizing legitimate expense deductions.
Okay, that's one.
And potentially minimizing your personal health insurance premiums by strategically setting your officer compensation at a lower level.
That's two. Any others?
Well, plus the ability to pay family members tax efficiently, potentially. It's presented as a powerful combination for optimizing both your tax and Social Security obligations.
So, to bring it all together, what's the main takeaway from this book summary regarding forming a microcorporation in Japan?
The core message really is that establishing a microcorporation in Japan is presented as a potentially powerful and perfectly legal strategy to significantly reduce the financial burden of both taxes and Social Security contributions compared to working as a traditional salaryman.
And that means more money in your pocket.
Right. This reduction in the burden directly translates to a potentially substantial increase in your net disposable income.
And the book frames this as a way for individuals to kind of level the playing field, to take advantage of strategies that maybe others who are more financially savvy are already using.
Yes, the book summary reiterates the author's perspective that this is a way for individuals to potentially escape what they perceive as an unfair financial situation imposed by the national system. It suggests that this is a method that those who are in the know, particularly wealthier individuals, are already actively utilizing to their benefit.
Interesting. Taking control back, in a way.
That seems to be the underlying theme.
So, given all this information, what might be a logical first step for someone who finds this idea intriguing? What should you, the listener, start thinking about?
That's a really important question for you to consider. Based on this information, the initial steps someone might take could involve doing further research into the specifics of forming and maintaining a microcorporation in Japan.
Like the actual nitty-gritty.
Exactly. You might want to look into the legal and accounting requirements involved and perhaps consider consulting with professionals who have experience in this area, accountants, tax advisors.
Yeah, probably not a DIY thing for most people.
Probably not ideal, no. Potential challenges or things to think about could include the administrative work involved in running a corporation, ensuring you are fully compliant with all tax regulations, and understanding the long-term implications for your personal finances and Social Security benefits.
Right. It's not just about saving money today, but how it affects things down the line.
Absolutely. It encourages a thoughtful consideration of how this information might apply to your own financial situation and what further investigation might be necessary before jumping in.